Want to turn $100,000 into millions? I'm revealing my 20 stock picks like Apple and Nvidia and other ones, plus my ultimate long-term investing guide to make it happen. Stick around, this plan's a game changer. With that being said, I'm not a financial advisor. I'm not here to tell you guys what to buy, hold, or sell, but I'm hoping to make you guys get a long-term also. A long-term is something that doesn't fail in market uncertainties, and it's one thing you can put your extra money into and honestly be safe and financially free. With that being said, I'm putting $100,000 into stocks. I'll be throwing $100,000 into long-term stocks. So the goal is to do this together. But if not, I'll be doing updated videos anyway. So if you guys are interested in getting a long-term but not ready yet, I'll tell you guys my progress, especially in this market uncertainty. With that being said, I do have a course and it's ultimate guide for long-term investing. But into this guide, it also tells you guys how to trade fundamentals and everything that you need to know about charts and how to read a stock, how to read everything that you really need to know. And it's in this. And it also gives you my personal stock picks that we're going to be going through in this video. And it gives you 20 bonus stocks. And also, you can use what you learn in this in your short term trading. I personally day trade too. So I put a lot of day trade goodies in there, some good strategies and stuff like that. So this is the ultimate trade guide, but I just have it for long term investing. But you guys can learn everything you need to know for short term, long term swing trades, everything you guys need to know. So if you guys want, link in the description below, first link. But if not, man, that's okay too. A sub is all I need. With that being said, how to start long-term investing. So this is the beginner's guide. What you need to know to grow wealth for the next 5 to 10 years and potentially 20, especially if you're young, you can hold this for 20 years. And once you get that first retirement in, you could start digging into this and you don't have to work a second job. With that being said, what is long-term investing? Buying and holding assets like stocks for 5+ years. Goal, wealth growth, compound returns, and beating inflation. Strategy focused on business fundamentals and not daily price swings. So just understand that. With that being said, why long term investing works: compound interest over time. So you make interest over time, less stress, fewer transaction fees. So literally, this is one thing that you don't really have to pay attention to a stock for daily, like day trades or anything like that. And you basically just put your money in and just let it grow itself. Of course, it might take a little bit to start seeing a lot of money, but that is the thing with the long term. It's going to take a long time, but you'll see big growth in the future, especially if you invest into some of these stocks. Historically, stock markets grow over time, allow companies to innovate and grow. So, I mean, if we've seen the chart with SPY grows even after the dips that they have. Even if they have a bearish market, it still beats all-time highs. With that being said, getting started with long-term investing. So basically, first step. So step one, set financial goals. I recommend writing down what your goals are. So define objectives. So what you want to be at when you retire, how much wealth you really want to build, and things like that. Just have your 5 to 10 year horizon, and goals is just the best thing you can do. Next step two is assess your finances. So pay off high interest debt first, because honestly, if you put money into a stock, let's say the SPY, and you might be making a 10% return, you might be paying more on that high interest debt than you put into the SPY rather than just paying off your debt. But with that being said, you also want an emergency fund. So basically, just add up all of your bills and multiply it by 3 to 6 to make it basically how much you're going to be paying each month. And you kind of want that off to the side. So 3 to 6 months worth of bills saved into just a savings account or something like that, just so you don't have to touch. Because the thing with the long term is that it's there if you're down bad, but you want to be like close to death before you get into your long term, before you cash out any of your money out of your long term. Because then once you start cashing out money, you're going to make it a normal thing. And then now you're going to just cash out money whenever you need it. When in reality, your long term, whenever you touch it, you just want that thing to, you just want to touch it if you really, really need to. So the emergency fund is going to be something that you need because so you don't touch the long term basically. Determine your monthly investment. So honestly, people say 10 to 20% of your check should be going towards your long term. I recommend 10% just so you're not overdoing it. And now, next, you want to choose an investment account. Brokerage account, flexible and taxable. IRA, tax advantage for retirement, and 401k, employer sponsored with matching. So, if you have a 401k with your employer, basically they're going to match. If you put 5% in, they're going to put 5% in, which means you're putting 10% in overall, which is a great one. But other people are investing. You're not investing into the stocks. And a lot of you guys watching this are probably stock watchers yourself. So if you guys are into stocks and those companies and want to invest in your own, you just want to invest in your own individual companies, just like we did here today. But next, now you want to research and select your investments. So focus on stocks, ETFs with strong fundamentals, So stocks, honestly, stocks are a little bit more riskier just because individual stocks, if they get sued or anything, they can get a big price hit. Just like we've seen recently with Tesla, we see Tesla move up and down. We've seen it all the way up to a 450 level, and then it lost 50% of its gains. And imagine if you invest your long term up at that 450 level and you lost your 50% that fast. So honestly, ETFs are just strong. I mean, they're stronger and safer just because other people are controlling it, and it's just the top stocks. So ETFs are made to never really go down unless the whole stock market is going down to say. So if you look at like SPY, for example, SPY is made to go up always unless we have what we've seen recently with the tariffs and just market uncertainty. But overall, even if like Apple sells off, SPY is still going to be up because there's other stocks holding it up. And then for some more research, I personally use Yahoo Finance, and Yahoo Finance is a great one, and Morningstar or Broker Tools. So me personally, I also have TradingView, and they have a news application, and it just basically explains what the stock is. And they also have some great tools saying that you should buy the stock, sell the stock, when's a good time to buy it, the actual good value of it, and everything like that. And I recommend using those tools too. So long term versus short term investing. So long term, 5 to 10 years, fundamentals lower, risks tax less. And short term is days to weeks, technical news, higher risk, and they're also taxed more. So keep that in mind. But honestly, I think you should be doing both, but put most of your money into your long term, of course. And then let's say just put $1,000 into a separate account, and that can be your short term trading account. And you can just hold, some option plays for a couple of weeks or something like that if you think a stock is going to go a certain way. But with that, you need to know technicals, you need to know news, and it's just really risky. So honestly, just do your research before you do short-term trading. And honestly, if you scoop up that course, you're going to learn a lot about short-term trading anyway. Just want to take a break and say, please subscribe. I appreciate you guys for watching and appreciate you guys' time. And if you guys appreciate this video, just smash that sub button and have those post notifications on. We make daily videos, and honestly, I'm going to be updating you guys with this portfolio. But what makes a good long term stock? So you need strong financials, so good revenue, good profit, good cash flow. You look at the difference between Apple. Apple has a lot of cash flow, they have a lot of revenue and a lot of profit, basically. But then if you look at a penny stock, they don't have that much revenue, they don't have that much profit, and they don't even have cash flow. So it's kind of the difference. If you want to get a good long term, something like Apple or Nvidia is pretty great. And if we look at that picture below, it shows the revenue and just the increase over time. The net income, 72.9 billion, and that's Nvidia. And then their free cash flow shows what their free cash flow is, and it's more than double what they had in 2024, which is insane. So this is the stats that you really want to look at, and you can use tools like ChatGPT. That's what I use right there, just to get the information pretty quickly. But you also want to see competitive advantages, so basically brand tech and patents. And you want to see their leadership, consistent growth history. So if you look at Nvidia, we see the earnings, and we see the earnings going up so much. So honestly, man, that's just consistent growth history. Strong management team. Everybody knows Nvidia's CEO is just golden. And that's just, I'm just using Nvidia as an example just to kind of explain it a little bit more, because a lot of people know about Nvidia. So tips before you guys start. So first off, you want to create a budget, only invest what you don't need short term. So honestly, if let's say your bills, you make $3,000 a month, and this is just an example, and out of that $3,000, all of your bills, it's going to be $2,000. You have $1,000 left out. And then out of that $1,000, you probably have groceries, gas, stuff like that. So you probably have 800 for that. So then now your budget, you have $200 free that you can invest, and that's basically what you don't need short term. You also want to pay off the high interest debt first, set goals like I said before, and now you want to open a brokerage account. I have links below for Robinhood. Robinhood is a great one to use. It's very user friendly. That's the one I personally use. But for my long term, I do use Webull, and you can also use Fidelity also, just in case if you guys. I think Fidelity is decent too. With that being said, what is dollar cost average? So invest a fixed amount regularly. So basically, let's say you invest every time you get paid, and let's say you get paid on the first. So if you get paid on the first, just like the example we used before, that $200, you can be putting $200 every single month on the first of the month. And let's say for the SPY, I think SPY is trading at like 560. I might be wrong. I think 560 to 570. But let's say today SPY is trading at 560, right? And then next month it's going to be trading at 500 somehow. So your average cost overall is going to be reduced because you bought half of a share at $200. It's not going to go down too much, especially if you have a lot of money in there. But your average cost, your dollar cost averaging will just bring your average cost up or down. but it reduces the impact of market volatility and it's emotional free investing strategy. Because honestly, dollar cost averaging isn't bad, and there's actually a statistic saying that dollar cost average works better than waiting for dips and stuff like that. So keep that in mind. That being said, make sure your portfolio is diverse. So spread investments across sectors, mix of growth, value, dividend, and ETFs. It helps lower risk without sacrificing returns. So you got to understand how the stock market really works. So we have different sectors basically. So let's say, for example, what a lot of people sees now. So if the tech sector goes down, the staples goes up, and staples is like Clorox, stuff like that, just consumer staples, things that you buy at a grocery store. But let's just say once the tech stocks start selling off, and we see that a lot nowadays, once that starts selling off, you will see staples go up, and sometimes energy and stuff like that goes up too. And like a normal stock market kind of moves in cycles. So sometimes you have tech going up, and then one month you have staples coming up. And I'm not saying monthly, but just like it'll just be in sections basically, in cycles. So keep that in mind. So having your account diverse is going to prevent a lot of losses basically. That being said, now let's get into my stock portfolio. Let's break down the tickers I personally own and why I chose them. So here goes how much I own and how much money I have invested now. I invested this, I think, a month ago. It took me a while to make this video, but it is up $2,000 right now, 2.5% already, which is kind of insane. That's in 1 month. So keep that in mind. So let's get into the tickers. So first off, Apple. So basically, if you guys don't know what Apple is, man, they make iPhone. They're basically the biggest phone provider right now. I think China they might be lacking a little bit, but they're bullish because their services growth. Why is it bearish? So iPhone dependency. iPhones are getting a little bit less sales, especially in China because of the AI. The AI just isn't as good as the other phones, and people are just getting the other phones with the better AI. Of course, we still see them in America. People still love iPhones, so honestly, man, it's never going to go away. And it's just a great long-term stock that's never going to die down. So keep that in mind. Next one is NVIDIA, GPU leader in AI. And there's over $5 trillion plus that's going to be going into AI by 2030. And who's going to benefit the most? NVIDIA, because they're basically just the GPU leader. They're the leader in gaming, they're the leader in data centers, they're literally in everything. Next, bullish. So the AI boom, everybody knows about the AI boom. NVIDIA went up like 150% in like 1 year, which is insane. But bearish, high valuation, and the competition that they have, honestly, we gotta keep that in mind. And they're kind of lacking right now, but we did just get a bill signed saying the H20 chip can be shipped back to China, so that is kind of better for NVIDIA. So next is AMD. Why AMD? So if you guys don't know what AMD is, and you guys never had an older computer, and honestly, AMD is still making chips, but AMD is kind of that GPU maker that honestly isn't really doing too well right now. But we are trading a little bit at that $100 level. But the thing about this one is that they have a big reach to the top. Honestly, they can get up to like 200, $300. And the downside risk, there's not really that much downside risk for this stock. So with that in mind, this is a very undervalued stock right now. And that's what everybody says. So with that being said, AMD is just that one that I'm willing to hold 5, 10 years. And then maybe in 5, 10 years, I'll make my money back, and or they'll make something groundbreaking and their stock goes up by like 200, 300%. And I just benefit a lot off of it. If we go back, I don't have too many shares of it. I think I have like 50 shares or I have 5 shares, $513 worth. So I don't have too much in there yet. I want to hear more news and stuff like that on AMD before I invest more. But this is just one that I want to have my money into. Next one is Intel. So this is another one that's kind of like AMD, but it's a little bit worse. It's literally worth $15 right now, and the upside risk is a lot. You can probably see the stock back up to that $60 level and or even $100 level, especially if they turn around. They just had a new CEO, so maybe he could turn it around, maybe give me 10, 20, or 100 to 200%. And I think Intel, I have a little bit more shares. Yeah, we have 100 shares of Intel priced at $2,000. So honestly, man, if if Intel can pop off, Intel will make me a decent amount of money. Next one is Palantir. Why Palantir? Because honestly, bro, Palantir is probably the safest stock right now, especially within these times. The thing is, like, this stock didn't even go down that much, and we just beat all-time highs. And we're a little bit below all-time highs now. I think it just beat a new one. So now it's 130. Before it was 126. But with that being said, it is still looking pretty bullish. And I'm very confident in Palantir. and I think my average cost is pretty low. So I think I got Palantir like $80 at the time of buying it. So honestly, man, I'm going to be holding this one for the long term. And people are saying that Palantir can get up to that 150, 200, and I even see some levels of $300 by the end of this year, which is insane. But even if it doesn't get it by the end of this year, we can see it by the end of the next year. So honestly, this is one that I recommend everybody get into, especially just, I mean, be a little bit patient. I do recommend waiting and seeing if the stock can drop down to $100 again. But honestly, man, I think it's too late now. With that being said, next one is SMCI. There's been some great news with this one. It's an AI server hardware, NVIDIA partner, and they have fast growth. And this is just a great one to get into. So do your own research on this one yourself, because I don't know too much about this one, but I just know that it's a NVIDIA partner and they're pretty good with the AI server, and their numbers are looking pretty decent. Next one is Robinhood, the one that I told you guys to use for your brokerage. The main reason why, because this is the Gen Z. Okay, this is the Gen Z trading platform. Literally everybody has this one. The reason why I personally invest into this one is because anybody that talks to me about trading, they pull out Robinhood. I'm not even gonna lie. I never seen anybody pull out another brokerage whenever they talk about trading. So honestly, literally everybody uses Robinhood. I think the old school traders, they use other platforms, and the professional traders, they use other platforms as well. But with that being said, everybody that trades normally has a long-term stuff like that. They normally use Robinhood, and Robinhood is kind of boosting their game a little bit more. It's pretty cheap to trade. Their fees isn't really that high, and also they're adding sports betting and stuff like that that can make more cash flow basically. And they're trying to get, like, they have a gold credit card that's coming out, and they're just trying to make their own bank basically. So honestly, man, I think Robinhood has a lot of good growth, and I recommend everybody to scoop up Robinhood. Next one is BN Brookfield Corp. This one I recommend you guys do your own research on, because this is more of a penny stock. I do want a little bit more riskier assets in my portfolio. So this is one that I don't recommend getting unless you do your own research first. Okay, understand what the company really is, but they're really an asset manager, and basically they have high demand in what they do, but bearish interest rates can really change it. So keep that in mind, and please do your own research before investing into this one. Next one is EPD, and it's another penny stock, but it's in the energy. So if energy goes up, this one's going to go up. But this one is also another penny stock that I recommend doing your own research on. And I have a full video on what these really are and what they do, and that's my penny stock video. I put $30,000 in a penny stock. So if you guys want to actually know what these are, I recommend checking that out. But penny stocks, I don't really recommend getting in your long term. I just have me a few, and I don't really have too much money invested into it. Actually, I think I do, but I don't at the same time. I think I have like $10,000 now. I think I sold most of it. I think I got $30,000 first, and then I was like, nah, it's too risky. So I just put $10,000 overall. Next one is ExxonMobil. This is one that's going to grow pretty well. But with that being said, we do have news articles saying that gas prices can get as low as $3 this summer. So I recommend waiting until the summer and seeing if the gas prices really do get lower, because gas prices really, really affect this stock price. So if gas prices go down, the stock price is going to go up. Once gas prices go up, the stock price is going to go up. Sorry. But they're basically a global oil company. They have oils, gas, everything like that. Bullish energy scale, dividend, and also bearish environmental pressure. So keep that in mind. Next one is Visa. Visa is another great one. What are they? They're the payment processor. But if you guys really don't know what Visa really does, mainly every single company that you probably buy from, Apple, every big company, Walmart, stuff like that, they use Visa for their transactions. So literally every company uses Visa, and that's why it's so good. But it's the digital payments growth. But you gotta understand that with Bitcoin taking over and crypto taking over, it might take some of the profits from Visa. But at the same time, I don't think Bitcoin can take over Visa, because Visa is like a bank transaction. Bitcoin is going to be a whole nother, like you already have your money in Bitcoin, so you might need to use Visa to transfer your money anyway. Not really, actually, I don't think so. But Visa is just big. Every company uses it. Not every company, but most of the bigger companies use it, and it's just going to grow, keep on growing, because everybody uses it. They're going to keep on bringing their numbers up, bringing their profit up, and stuff like that. Next, we have Costco. If you guys don't know what Costco is, I don't think you live in the USA or some shit like that. But basically, they're a bulk retailer. If you guys want waters, you guys can get like 1,000 waters. I'm not even gonna lie. I mean, you can just buy a bunch. And bullish, why are they bullish? Because somehow they made a grocery store with a membership fee. So even if maybe you're traveling, you still got to pay that membership fee. So they're making profits with membership fees, and they're making profits with what they sell. So basically, the stuff is a little bit cheaper, of course, but it kind of they make their money back with the memberships to say. So really, Costco is never going to go anywhere, and honestly, they do pretty good. I'm not gonna lie, like Walmart and stuff like that is still gonna like overtake them, of course, but Costco, I think I know a lot of people with a Costco membership. I personally have one too, so honestly, there's no point not to put this in your long term. And honestly, sometimes they be making some good breakouts, you know. Next one is PG. So they're basically in the consumer goods. This is a good staple company and basically bullish. They're staple demand and basically they're just the overall staple stock to say. You know, they kind of just hold a long term and like Bounty, just everything that you need around the house, even Pringles, which is insane. But this is a great one for to diversify your account. I recommend investing into this one just to have a staple stock in your portfolio. Next one is Coca-Cola beverage leader, literally. If you guys never had a Coke, I don't know what to say. But honestly, Coca Cola does better than Pepsi. Comment down below which one you guys like more, Coca Cola or Pepsi, whatever you guys like more. Add that to your long term. But with that being said, Coca Cola is never going anywhere. And they even said in their earnings that tariffs isn't going to affect their prices, which is one thing that people were looking for. And this did bring their stock price up. But also keep in mind that they do have health trends, but it's not really that bad. You know, they have Diet Coke. You know, everybody loves Coke. I love Coke. Okay, so next one, man. I honestly don't recommend investing into IBIT right now, but IBIT is basically an ETF that moves with Bitcoin. And the reason why I say don't invest into it because Bitcoin has broke that 100K level. And when I bought IBIT, I got it way before, like I think I got it when Bitcoin was at the $90,000 level. So I do recommend waiting until Bitcoin goes down a little bit more unless we make just a big breakout. But I do recommend having your patience with this one because if you don't be patient, you're going to see this one red and you're probably going to see it red for a while. So just have your patience with IBIT. Just watch Bitcoin if you really, really want to get into this one. But it's basically an ETF that moves with Bitcoin and it's like $50 right now. But I think when Bitcoin hits 100,000, I think it's like 56, 57. And then I think when it reaches that 110, if we do get to that 110,000 level, we might get to like 63, $64. So it doesn't move too fast, but it kind of does. And this is just a great long term, especially if Bitcoin keeps on going up. People are saying Bitcoin can hit 300,000, 400,000 later on. So honestly, having IBIT is a great one to have. But honestly, just have your patience with this one just until Bitcoin kind of slows down a little bit. That being said, next one is SPY. It's the top 500 US stocks, and it's basically already diverse. So I do recommend getting into SPY. SPY, I think their average returns is like 10 to 15%. But I think the last 3 years, we made over 20% with the SPY yearly. So that is pretty great. But we did just lose a lot of gains. And that's why I say investing into it now is pretty decent, just because it's at a lower price. Next one is Water Drop Inc. I think this is another this is another penny stock and it's an insurance tech and it's a Chinese company. So please do your own research before you get into this. It's bullish because it's underserviced and bearish because there's a lot of regulation behind it. But I do recommend doing your research, please, before you get into any of the penny stocks I've listed here. And just like I said before, I have a video explaining more in depth why they're bullish, why they're bearish, and just what they really are. So that's why I'm not really going in detail with these ones. Next one is EMX, another penny stock, but they're in mining royalties, rising metals, and they're just a metal company basically. Kango Inc., another penny stock. They're in auto financing in China. Another penny stock. Please do your research. Next one is Curiosity Stream, kind of a penny stock, but they're in education streaming. And if you guys don't know what Curiosity Stream is, a lot of YouTubers shout it out. But you basically just learn things and they're bearish because there's a lot of competition like YouTube and stuff like that. So long-term investing, it builds your mindset and you really just need a mindset to have, to be into it. Focus on fundamentals, you ignore the noise and stay patient, stay invested, okay? Be patient sometimes, but honestly, man, dollar cost averaging, do it once a month. That's all you really have to do. Just invest and forget about it, basically. This is just to have you to have a security in the future. With that being said, guys, thanks for watching the video. Smash the like button, subscribe if you guys are new. I'm going to be making updates on these, on what I've long term and how much money I've invested. But with that being said, I might do that either monthly or weekly. I think I might just do it monthly just to make it a little bit easier. So I might be doing it like every month on the first or something like that. So stay tuned if you guys are interested. Thanks for watching the video. I make daily videos on the stock market. So if you guys want to be updated, you guys can watch that. And thanks for watching. Smash the like button, subscribe, and peace out.